So if 2023 has taught me nothing about finances, it has taught me the importance of diversification. And today I'm going to teach you how to diversify your money. Hi everyone, this is Camilla, the Focused Spender, and welcome to my channel where I teach you how to get out of debt, save more money, and invest so you can build wealth and leave a lasting legacy. A lot has happened in the financial industry over the last 3 to 6 months. First, there was the collapse of FTX, the cryptocurrency exchange. Then there has been a lot of uncertainty with tech stocks, but everything seems to be back on track with that. And then most recently, the collapse of Silicon Valley Bank and First Republic. And for the average person, you may feel like this has nothing to do with me, but for me, it really has driven home a point. Keep your money well diversified. So I just watched this special on Netflix called The Monster of Wall Street about Bernie Madoff. And if you don't remember Bernie Madoff, he basically ran the largest Ponzi scheme in America where he was taking money from investors into a hedge fund and investing it. But the joke was he wasn't investing anything. He really was taking money from other people. And when people were asking for their money, they were saying, okay, here's my statement. I see that I've gained some money. He would just go into his funds, that pool of money, and then pass everything out to his investors. Now, he was getting money from millionaires and billionaires, so of course you're going to be like, well, I don't feel sorry for them. But he was also getting money from widows whose husband had passed away, and that was the money that they needed to live off of. He was taking money from small business owners who, sold their business and said, okay, I want to invest my money and I want to live off of something, and he was taking their money. And of course, like all Ponzi schemes, he eventually got caught, and now these people are left with no money. The investments that they had worked their life for is now gone, and now you have elderly people that have to sell their homes or go back to work. And the reason why I wanted to bring this story up is because it really taught me that you cannot trust one investment. You cannot trust one person with your money. Now, the people that fared the worst in this scheme are the people that took everything they had and invested with Bernie Madoff, because at the end of the day, there was nothing left. They had nothing else to fall back on because all of their money went with this man. Now, if they had said, you know what, he seems cool, let me put 20% of my money here and then, split up the rest, they would have still lost money. They would have lost that 20%, but they wouldn't have lost their entire life savings. So that again teaches me you need to diversify your money. So what does that actually mean, diversify your money? So I'm going to focus on 3 different ways that you should be diversifying. The first is banking. And honestly, this is not something that I've thought about in the past, just because I, like many people, just thought you put your money in a big bank and it's secure. But I do have my brokerage accounts split up within different banks. And at first I thought I was crazy for doing that, but as we see with First Republic and Silicon Valley Bank, I am not crazy. So in terms of diversifying your money with banks, I'm specifically talking about your regular bank account. So the FDIC will insure your bank account up to $250,000, meaning whatever happens with that bank, your money is secure up to $250,000. If you have $300,000 in the bank and something happens, you'll get $250,000, you'll lose $50,000. Meaning, if you do, for some crazy reason, have that much money in a bank account, you should split it up into multiple banks. You should not keep all of your money, especially if you have a lot of money above that $250,000 limit. You should not have all of that with one bank. You really should be considering investing some of that money so that you're not sitting with that much cash, but that is another topic for another day. So the second way you can diversify your money is with the industries that you are investing in. So when I talk about industries, I'm talking about tech, I'm talking about real estate, I'm talking about utilities and consumer products, I'm talking about healthcare, things like that. You do not want to have all of your money sitting in one industry, and you really don't want to have your money sitting with one company. So let's say you work for a company and they pay you out in stock. Maybe for a while you keep all of that money or most of that money with that one company stock, but at some point you need to sell a portion and invest with other companies. You cannot rely on just one company to save you or one industry to hold all of your money. Let's think about the housing bubble burst in 2008 or the dot-com burst in I think about 2002. If all of your money was sitting in one of those industries during the times where everything went belly up, you would have lost everything. So you want to make sure your money is not sitting in one industry or with one company stock. And the third way you should be diversifying your money is within different asset classes. So when we're talking about asset classes, we're talking about cash, US stocks or bonds, foreign stocks or bonds. You want to make sure your money is split up between those different asset classes and not have everything in one asset class. So it is not safe, it's not okay to just have all of your money in cash, because you're not going to make any interest, or you're going to make very low interest. Your money is going to grow much faster if you have it in stocks. However, you also don't want to have all of your money in stocks, because stocks are inherently risky. So you want to make sure that you have some money in cash, some money in low risk bonds, and some money in high risk stocks, so that you can build a balanced portfolio. When one thing goes up, something might be coming down. When something is coming down, something else is going up. So you want to have that balance. And now there's a debate on whether or not crypto is a real asset. I, for this purpose, will say it is an asset class. I would say that if you do want to invest in crypto, do not do more than 5% of your money, maybe 10, but you don't want to take all of your money and dump it into crypto. We saw what happened just a few months ago, or some point last year, where it just tanked, and now it's starting to recover, but it's nowhere near the highs of yesteryear. So you want to make sure if you are investing in crypto, you're just doing a small portion of your money, because it's highly speculative and extremely risky. So you don't want to have too much money in that asset class. Now, if you want to check out your portfolio and see how it is in terms of asset diversification, I'm going to recommend Empower. So Empower purchased Personal Capital, which is a platform that I was using for years, and now they've been purchased by Empower, but they still have the same function. It looks exactly the same, and it's a website or a money management tool that allows you to link all of your bank accounts and all of your investment accounts, and they track your net worth, they track your spending, they track your investments, all of that stuff for you. And one thing they have is an investment checkup. And so in the investment checkup, they show you your current allocation and your target allocation based off of, a series of questions that they're going to ask you about, when you want to retire and your lifestyle. So with that investment checkup, you can see how your money is invested, how diversified you are, and how it compares to the target allocation. And then they also give you advice and guidance on how to reallocate your money if you need to do so. And so I definitely recommend that, because that helped me a lot when I was deciding to really pay attention and be serious about my stock portfolio. So if you want to try out Empower, I do have a link to it in the description box below. So I hope you enjoyed this video. I hope you spend some time looking at your money, do the diversification, reallocate, and make sure your money is protected. Please be sure to leave me any questions and comments, and I will see you next time. Thanks. Bye-bye.